Welcome to Talk Tickers. Today, we're digging into the Q2 2025 earnings from Pulmonx, and honestly, this one was a real head-scratcher. On the surface, it looked like a solid win, but the market reacted like it was an absolute disaster. We're going to unpack exactly what happened and, more importantly, why.
So let's just start with the central puzzle here. How on earth does a company beat on both revenue and earnings, the things you're supposed to do, and then see its stock go into a complete freefall? It seems completely backward, but there's a very clear reason, and we're about to get into it.
Okay, so here are the headline numbers from July 30th. You can see revenue came in at $23.9 million, just ahead of what Wall Street was looking for. And on the bottom line, their loss per share was 38 cents. Again, a little bit better than the 40-cent loss analysts had penciled in. So, by all accounts, a clean beat on both. So far, so good, right?
Well, the market even thought so at first. In after-hours trading, the stock ticked up a bit. But anyone who actually listened to the earnings call heard something that just completely overshadowed those Q2 numbers. The market doesn't care about the rearview mirror. It's all about what's on the road ahead. And here's the bombshell, the guidance. Pulmonx took a hatchet to its full-year revenue forecast, dropping the midpoint from $97 million all the way down to $91 million. For a growth-focused medtech company, a guidance cut of that size is a massive, flashing red light. It signals that something, somewhere, has gone seriously wrong with the business.
So, what caused such a dramatic shift? Well, the answer really boils down to a tale of two completely different markets. It's like the company is operating in two separate universes right now.
I mean, just look at this contrast. It is night and day. Their international business was on fire, up an incredible 32% year over year, a record performance. But at the same time, the U.S. market, which is supposed to be the main engine, grew by a measly 6%. This huge split is really the core of the entire issue.
Okay, so the obvious question is, what in the world went wrong in the United States? Management had to answer for this, and they pointed to a few different headwinds that are really putting the brakes on growth.
They talked about tough comps from last year, sure, but the bigger issues were a decline in what are called Stratx scans. That's a key diagnostic test to find patients, so think of it as a canary in the coal mine for future business. And they also said hospitals are just busy. These specialized centers are getting pulled in other directions, like robotic surgery and lung cancer screening, which means Pulmonx is getting less attention.
So what are they going to do about it? Well, they laid out a three-part plan to try and get the U.S. business fired up again. They're going straight to patients with ads, they've created a new specialist sales role, and they're leaning on a new piece of tech that they hope is a real game changer.
And that technology is called LungTrax Detect. It's actually a pretty clever idea. It's an AI tool that just sifts through all the thousands of CT scans a hospital already has on file. The whole point is to automatically find patients who are good candidates but might have been missed. It's a way to create an automated referral pipeline, which could solve a huge bottleneck.
Now, on the call, management tried to soften the blow. They framed the guidance cut as just a recalibration based on timing. But the market wasn't buying it. Not for a second. Investors delivered a swift and absolutely brutal verdict. This timeline just says it all. You can see how fast sentiment turned. When the headline numbers first dropped, the stock was actually up almost 2%. But by the end of the next day, after everyone had time to digest that guidance cut, the stock had just cratered by more than 41%. It's a perfect case of, it's not where you've been, it's where you're going.
And this wasn't just a few nervous investors selling. The sell-off happened on massive volume, almost 4.7 million shares traded hands. That's nearly 10 times the normal volume. This was a clear, widespread crisis of confidence across the investment community.
And you know what happens next, right? The analysts pile on. Piper Sandler didn't even wait a day. They immediately downgraded the stock to neutral and just slashed their price target all the way down to $2.50, pointing squarely at that guidance cut.
So, with the stock totally reset and a huge cloud of uncertainty hanging over the business, where do we go from here? What should we all be looking for in the next earnings report?
Look, the next 6 months are absolutely critical for Pulmonx. The number one thing to watch is whether those U.S. initiatives actually work and get growth moving again. That's the key, especially because they're already telling us to expect that amazing international growth to slow down a bit, all while, of course, keeping their spending under control.
So after all that, our rating here at Talk Tickers is market perform. You've got this really powerful, undeniable growth story happening internationally, but it's completely canceled out by the major execution risk here in the US. It just creates a balanced, but probably very volatile risk-reward profile from here.
When you boil it down, there are really two clear paths for this stock. The bull case is that the U.S. turnaround plan works better and faster than expected, and the now much cheaper stock rebounds sharply. The bear case, though, is that these U.S. struggles continue and management gets stuck in a show-me story for the next year, where the stock could just tread water or even fall further.
You know, with this kind of extreme uncertainty, where the stock can make a huge move either up or down, it brings up an interesting idea for options traders. It's called a long strangle. This isn't a bet on whether the company will succeed or fail. It's just a pure bet on volatility. You're basically saying, I don't know where it's going, but it's not going to stay still.
And of course, we have to say it. This is not financial advice. All of the ideas we talked about today are for informational purposes only. You should always do your own deep dive research and talk to a professional before making any investment decisions.